just starting.
Oh,
So while you're
okay.
getting the video up.
Okay.
So what we're going to talk about today is first we're going to introduce a scheme that's being set up in Myanmar called WinePay that Nia is going to talk about. Then we're going to talk about some of the lessons that we've learned in the process of setting up a new scheme that from a business perspective of challenges we faced and will continue to face that we think are probably applicable to other people looking to start up new schemes, particularly with Mojaloop as a foundation. So that's where we're going to go today. But we'll start off with introducing WinePay with Nia. Go ahead.
Thank you, Steve. I think the key word here is that we are in the process of setting up this scheme. So there are a lot of lessons that we are learning and that we'll continue to learn until we have a scheme in place. So we will talk about the scheme and also the governance structure of the scheme that we are setting up. But before we do that, we want to show you a 7-minute video to give you a context of the landscape and also the project that we're implementing. Shall we play the video?
Let's try.
Thank you.
Myanmar's microfinance industry serves over 5 million clients in some of the hardest to reach areas with safe credit and deposit services. These clients are excellent borrowers with very high repayment rates, but they and their loan officers spend a lot of time passing cash around. With the country's expanding digital payments ecosystem, it makes sense to allow MFI clients to use these services to give them better control and flexibility. But the challenge is that there are so many MFIs and so many digital payment offerings. Trying to connect them all creates a complicated and expensive web for everyone, both MFIs and digital payment providers. This system of bilateral arrangements is incredibly brittle, meaning upgrades and improvements are nearly impossible, which makes no sense in Myanmar's ever-changing economy. Most of all, it's confusing for the clients because every service is different, which means lower usage and fewer transactions for everyone. WinePay offers a single point of integration for both MFIs and digital payment providers. For MFIs, this means simplifying integration. Instead of connecting to multiple wallets and with different APIs, settlement processes, and commercial arrangements, you only need to connect to one platform. It also means you have a better bargaining power as a group and therefore better control over the experience of your clients, which minimizes the time you need to spend educating loan officers and clients about their options, as well as the time on dispute processes if there's a problem. Plus, every time a new wallet or agent network joins WinePay, there's no additional work for you. Your clients just automatically get the new channel. For wallets and banks who see the size of the aggregated MFI industry as an opportunity but are daunted by its fragmentation, WinePay is the one-stop shop for all of the MFIs, reducing the requirements for business development, contracting, operations like clearing and settlement, and integration. Operationally managing 10 MFI partners is difficult, but 50 or 100 is nearly impossible. Each time a new MFI is onboarded to WinePay, you don't have to pay anything or do anything. You automatically get access to those clients and their transactions. Scale is impossible with bilaterals, but for digital financial services, scale is the only thing that matters. Most importantly, for the clients, this means they can go to any wallet, any bank app, even any bank branch, and enjoy the same experience to repay their loans, dramatically increasing the uptake of digital services for the whole industry. WinePay offers a common platform owned and governed by participants, the MFIs, banks, and wallets, allowing them to ensure that the rules and pricing are suitable to their business model and can change as the markets change. This means there is no private company seeking a monopoly. With razor-thin margins for serving the last mile, The last thing the finance industry needs is a rent-seeking middleman. WinePay is focused on MFI loan repayments and loan disbursements because they're the first needs that cross industry boundaries, but the vision is to solve much bigger challenges, particularly for non-banks like MFIs and wallets, but we'll talk about that later. So who is WinePay? First and foremost, it's the participants. WinePay is governed entirely by a scheme council made up of MFIs, wallets, and banks. This governing body will always remain, ensuring control for the participants with voting rights rotating based off participation. FSPs not on the scheme council can join the advisory council, meaning they can give input to the choices that the scheme council votes on, but don't have a vote. Then they can opt to be on the scheme council later. Fitzworks, the trusted technology partner of the MFI industry, is the scheme operator, coordinating the industry and managing the day-to-day of the platform and enforcing the rules decided on by the scheme council. The technology is based on Mojaloop, an open source payment technology supported by Google and the Bill and Melinda Gates Foundation, reducing dependencies on foreign technology providers. The initial project is being supported by UNCDF to get set up and running so that participants only pay for ongoing costs, not the initial setup. There are always a lot of questions, particularly around pricing and product design. We encourage you to check out our FAQs. It covers everything from settlement, which happens once per day, to how to get access to the API requirements. The most obvious example of this is the question, who else is using it? Please go to the website for the most current list, but remember, as the network grows, it will be more useful to you without any additional cost or effort to you. But always remember, we want this to be your platform. So if there is some detail you don't like, don't decide not to participate. Decide to join and change it. Chances are a commercial middleman won't give you that same option. Perhaps the most important reason to become a participant in WinePay is not these initial use cases. It's to be a part of shaping the common platform of the future without adding additional integration costs and delays. The Mojaloop technology was built to be able to manage all real-time payment use cases, including peer-to-peer, merchant payments, and network-level open banking. We're just scratching the surface of what WinePay will be able to offer in the future, but only if and when you, the participants, want it to help grow your business. And since we believe in interoperability and Mojaloop was built to interoperate with other systems, as other national interoperable digital payment projects grow in Myanmar, WinePay members will be able to join those platforms through WinePay, reducing costs to participate there also. We've got a step-by-step process to participate that reduces the impact on your team because we know they're busy, while still allowing you to learn and understand the platform before making any binding decisions. So come and join the WinePay movement.
Thank you, Simon. That video was made as a executive briefing video, right, to show to the FSP. So there are some information that you already know, of course. But the idea is that we want to use that as an outreach tool, right, to get to the executives, the CEOs of the banks, and the FSPs who doesn't know much about what we are doing, but are interested. So we are very happy with where we are right now. So in terms of the project, so the project is called Microfinance Digitization Project, Myanmar Microfinance Digitization Project, or MMD. The idea is that WinePay interoperable platform is much needed in the country, but we wanted to start with a sector of the country, right, to focus on. And the sector that we wanted to focus on was the microfinance sector. So the project is co-led by UNCDF, the Sawaks and Motorsports as the chairs of the project. this is an interim phase, and the scheme council, as Steve mentioned in the video, comprised of the banks and the MFIs who are making decisions on the scheme rules. And we also have a scheme advisory, who are the DFSPs who sign letter of commitment to join WinePay when it goes live. Right now, we have 31 organizations or 31 DFSPs who have signed up the letter of commitment to join WinePay. These 31 organizations include 18 MFIs who are servicing 0.2 million active borrowers, which is a sizable in terms of the market reach in Myanmar. We have a total of 5 million active borrowers, and 2.2 million of them are served by MFIs who have already signed up to use WinePay. And we also have 10 mobile wallets. In the country, we have 30 plus wallets. Right? So the interoperability is like much needed sort of service, because there's a lot of the defragmentation and fragmentation. And we also have INGOs who are interested in electronic cash transfer use case, right, once it is live. So there are 9 different use cases that we are planning to roll out over time, but we are starting with the repayment of MFI loans, and then we'll go to the disbursement, and then electronic cash transfer, so on and so on. Right? And we'll talk about how we are thinking about prioritizing these use cases, and all of the business model related to making decisions for a scheme like this. Very quickly, WinePay, the name WinePay stands for paying together. It's a double meaning in our language. We're very happy with the decision that we reached as a scheme, right, to name something that is very meaningful to us. In the video, in the last slide, where you probably saw a group of people on the street playing this cane ball. This is a very common national sport in Myanmar, right? And it's a sport where people don't compete, right? The idea is not to drop the ball, right? So the longer you can keep the ball up in the air, right? That's the aim of the game. And I think it really represents what we are trying to do with WinePay. Right? It's a loop, it's a collaborative effort, something that we want to keep growing, making sure that everybody's inclusive. Right? So everything speaks to that. In terms of the purpose, right? What we are trying to do is to expand the landscape of digital payment. The digital payment in Myanmar is at the very, very early stages, and we want to expand that by connecting those dots. In terms of the landscape, just so that you can imagine, we have 186 MFIs, we have 30 plus banks, and we have 30 plus mobile wallets in the country of 54 million people. And out of that, we have 5 million active borrowers in the microfinance sector. And that's the target audience that we are trying to reach with WinePay. And then over time, right, we will reach out to other sectors in the country.
Okay, so what Nia and I have been working on with WinePay, and we're going to hear from his lessons on today, is there's a lot of components to get to the point that vision that he was just talking about. But one thing is, how do we deal with the sustainability, the business model of WinePay? Now, when we talk about the challenges of developing a business model and testing a business model, there's a lot of business models. In fact, lunch we were just talking about the business model for an individual DFSP. There's going to be a different business model for a bank, a different business model for a fintech. We are talking about the business model and the sustainability of the scheme is what we're talking about. Just for clarity, we're not here to talk about the business model for an individual participant, which is a totally different conversation. So to keep things simple, I'm not an MBA, but these 3 concerns, I think, are a nice way for me to think about how to divide up the things you have to do. In order for something to be sustainable and continue to function, you have to keep your costs down, you have to keep your revenue up, and you have to manage your cash flow, which means you've got to make sure you don't have too much money going out. You've got to see how much money you can get to come in, and that timing of that money is very difficult to manage. So we're going to talk through the different challenges we faced on each one of those things over the past couple of years. All right, actually, I'll start. So one of the first things, and I think we want to spend quite a bit of time here, is all of the unknown costs. There are a lot of reasons for those unknown costs, but one of the biggest ones is we're still getting started on doing these things. I expect that in 5 years, we're going to be able to say, for this type of financial institution, this is how much onboarding costs. But when we started this, it was a big unknown. Mojaloop itself being a new technology, how much does it cost to implement it? How much does it cost to maintain it? What activities do you have to do to implement it, to maintain it? All of these were relatively unknown, undocumented when we started. Same with infrastructure. There are regular constant changes. We have some ways in which we've had done it initially, but that's changed a lot since we started implementing. So ongoing infrastructure costs are also somewhat of an unknown when we got started. Integration related to DFSPs has also changed. And then the last thing is, how do we manage the version control, particularly as Mojaloop continues to develop? And these are all things that are expected to be unknowns at this point. We want to highlight them so we can, as a group, start figuring out how do we make these unknowns knowns for the next couple of, for the next few implementations. Because the next 5 deployments are really going to help us hone these costs and make sure that the next people who want to start a scheme using Mojaloop are going to be able to clearly say, this is what it takes. So, Nii, do you have any thoughts on your lessons of these issues?
Thank you, Steve. I want to go back to one point that you mentioned in the previous slide. We don't have to go back there, but Steve mentioned that the topic that we want to focus on right now is the business model for the scheme, and that it is not the business model for the DFSPs. But we have to know that they are so interlinked. Because the scheme does not exist on itself. Right? We need to work with the DFSP. We need to make sure that the DFSPs who are going to be participating in the scheme are going to be successful. That we will also need to understand their business models so that we can work with them. So when we are working with the MFI partners in Myanmar, for example, they have very different business models within themselves. So they are very social driven MFIs, and they are also very commercially focused MFIs. I mean, there's no right or wrong, but it's just that we need to understand where they're coming from, and so that we can also provide the right pricing, the right business model that can work with them. Right? So when we're talking about the cost, Steve mentioned about different areas. I'm sure those of you who are involved in this kind of a system integration projects, this is not anything new, right? This is something that always exists in all the integration projects. But with Mojaloop, right, what is new is that because this is a new technology, right? One thing that really, as a local system integrator, one thing that really touched upon us was like, how much can we do locally, and how much resources do we need from international community and international experts? That really speaks on what is the cost, right, of developing something or maintaining something. So that we didn't know initially, and we are learning, and we're still learning. But I think, like Steve said, as we have more experience, then we will understand the local capabilities, our own capabilities, and how much we can do, and how much we will need to rely on X, Y, and Z experts, and that will really give us a better picture on how to manage the cost. Right? The same thing with infrastructure, right? We want to rely on cloud. We want to use a cloud as the main source of the infrastructure to host the solution. But at the same time, we are dealing with the local context, the local political economy that has changing regulatory environment, and based on that, right, there are DFSPs, right, who are looking at on-prem solutions, not really thinking that the cloud is something that that will solve their challenges. So we will need to really understand the different contexts, and that is still changing. Integration, again, a lot of the MFIs that we're working with in Myanmar use co-banking systems that are supported by international vendors, and that that also requires them to have expenditures that are outside of their control if they want to integrate with Mojaloop. And we need to look at all of these pieces, but having experience working very closely with Mojaloop, we have a better understanding of the landscape and how we can create these pricing models.
So I think that's key, is that we've learned a lot of lessons. We want to document that so we can share. I mean, maybe not. This is how many dollars this thing costs, but generally these are the costs you would expect to incur from your partner locally, et cetera, so that those lessons can become kind of the standard for how these things are done, so that for planning purposes, the next folks will know, all right, these are the costs I'm going to have to incorporate. So quite a little bit of a spoiler. I think in 2 people after us, Glenbrook is speaking, right? So they're going to be talking about a model they've come up with. So hopefully we can converge the lessons we've learned into the model that they've come up with. I think that would be a great exercise. I want to point out something that Nii is talking about, though, of international experts will very often be required for something that you may not have locally. And then also the hosting costs, if you're going to do this in the cloud, and a few others, those are going to be in some other currency. And you didn't bring it up, but this is an important point you talk about quite a bit, is the Myanmar Chat has not exactly been stable. And however, especially against the US dollar. And so if you have to pay people and resources in US dollars, but all your revenue is coming in a local currency, which is not stable against the US dollar, you're going to have challenges. And I think there's probably a few people in this room who can empathize with that problem. So move on.
Yes, thank you, Steve. I think that's something that a lot of the countries who are dealing with multiple currencies, right, will face, right? We are currently trying to find ways to deal with it.
So on revenue, there's a lot of different revenue models that we can look at. One of the ones we talk about regularly is the participation fee as a way of keeping transaction fees low. We believe in it quite thoroughly, that is the best way to keep transaction fees low. However, what we've discovered in dealing with the DFSPs, the MFIs, and the wallets in Myanmar was they were not a big fan of the participation fee. And that has created a significant challenge for how do we earn this revenue? We'll get into this with the cash flow problem, but participation fee is a great way to get some of your costs covered, your setup costs and your running costs covered up front prior to having significant numbers of transactions. But unfortunately for the DFSPs, they also see it that way. Why should I pay all of this money up front when I'm not going to see the benefits for this for some years? So that challenge of we expected to earn revenue from participation fees, but it wasn't exactly what they were hoping for. Do you have any thoughts? Go ahead.
I think you covered very well. Also, spoiler alert, in the like maybe 2-3 slides ahead, there's a slide that Steve's going to talk about chicken and egg problem. I think that's exactly the example here too. These initiatives require investment, and it is not cheap investment for a lot of those TFSPs that we want to work with. But at the same time, they also need to see a solid business model so that they can invest in it, and also, right, a lot of these organizations do not also have a lot of time to wait. Like, the runway is not very long, so it has to be really in time, and the business model has to be very clear. The price that we are charging to them, and when they will be able to recover these investment, has to be very clearly set up. But because in the previous slide we mentioned about unknown costs, they are the business models that we have to work with. Since from day one, CDF as Motorsports, we have worked on these pricing model that we've discussed with the FSPs, and they are in agreement with that. But it is changing. It is evolving as the economy is changing, as the political climate is changing. These model has to be evolved as well.
Yep. And I do want to bring up that point, and it comes to something we talk about with deciding on which use cases and some of the lessons that we're starting to look at with scaled solutions. And I think something that a lot of you are probably going to be hearing from me a lot, because I'm very focused on it right now, is some of the key design decisions that we've made around Mojaloop were intended to keep costs down when we scale low value, high volume transactions. And that's the core of what we've come here to do. In order to get to a cost recovery model at scaled, low value, high volume transactions. There's a lot of very nuanced things that we've decided to do to keep operational costs down. That's the beauty of Mojaloop. That's a big reason why we're all here. We haven't quantified that yet. And I think that's one of the main things is that's what I'd like to be working on from some of these lessons over the next 6 months is, can we quantify that in a way that we can take it to the participants so that they're willing to understand what that investment is? How much money are we going to save to the system by adopting this? And that's what we talk about. Yeah, how do we keep costs down, but quantifying keeping costs down so that the participants know what the value is for them. Okay. The next one is on cash flow. And this is also a major challenge. I think anyone who started a scheme knows that a lot of your costs come up front, but a lot of your revenue is not going to come for quite some time. And so it's a very high risk endeavor. And so that's why CapEx is often supported by other institutions, by funders, donors, et cetera. But that is a significant problem. And going to what Nee was just saying of, you can make a projection saying, we think we're going to make up this revenue to cover this initial investment in 18 months or 24 months. And then there can be a pandemic, or there can be a coup, or there can be a war, or there can be a financial crisis, or there can be all kinds of things. And that's going to change because over the course of 24 months these days, the world's going to see a couple of crises. And those are difficult to plan for. And so just one of the issues we have to think about with cash flow for these projects is it does require some patience.
Yeah, so I think the key point is to be able to focus and have a financial model that can calculate the runway more accurate. I think that will give us, and also the people, right, who are investing, right, all people who are funding, right, some level of confidence that okay, if we know that it will take us X amount of dollars and the X amount of months, right, to get to that stage, right, I think that will give all of us a better way of planning, right? And then we can also find ways of raising funds, right, from private sector, from different sector who are interested in this kind of business model. From PISA's point of view, right, we think that this is something that is much needed for the country. We think that this is the future, right? The digital payments is something that is going to be embedded, right, into everything that we do, all the economic activities. And I'm sure that over time, right, this will also be a sustainable and also even profitable, right, business operation. But to get to that stage, right, so we just need to keep finding ways of making sure that there's enough runway to reach to the stage where we are also sustainable.
Yeah. So we said this is about hard lessons. I think me and I would both agree. We should have invested more of our time in that business model and in this analysis much earlier on. And we probably should have been much more flexible as a group of the world has changed. The situation in Myanmar has changed. The business model has changed. So I would say if there are two lessons that apply to how would we have solved these three business model challenges, we should have done better in that. And so anyone who's listening, happy to help you with it because we would have liked to have had done that earlier. Okay. Okay, so we covered this, but the main point there was there's a difference if you're a new scheme versus an existing scheme. We were setting up a new scheme, WinePay is a new scheme, so therefore having to convince people of the future is very different than if you already have a scheme. You want me to talk about this one?
Yeah, I just wanted to share with you some of the tools that we used. We also have financial models that we have built in Excel and different kind of sort of models that we try to play with the different scenarios. This is one tool set that we use to prioritize different use cases. We have 9 use cases on the roadmap, and within those 9 use cases, we can even break it down further. Right, repayment can be done in different ways, for example. Right? And there's a need to prioritize. Right? there's a limited resources on all of us. There's a time that we are working, with. So we need to really prioritize what is the use case that we will work with. So we started with a repayment, which is absolutely needed in the industry. We have a second use case that is being right now in the development stage, but there are other use cases on roadmap. And the criteria that we have is how much demand do we have, right, from the industry, right? How much volume can you generate, and what is the inclusion impact? Right? This is also really important. Is it touching only a very small component of the sector, or is it really truly inclusive? And how much revenue can it generate? Right? I really like what I mentioned this morning about the business model being key, right, in these things, right? Because as much as we're all socially driven, and I think every one of us here in this room are socially driven, and that's why we're involved in a project like this. But at the end of the day, we need to be able to sustain our operation, sustain our businesses, so that we can continue to do what we want to do. And that revenue generation is a key part of that, so that we can fund the projects that needs to be funded. And of course, sometimes all of them, right, may check off that the last part, the level of complexity may be too far out of our reach, that we may not be able to do that as well. Right? So all of these criteria, we have the metrics that we use, we score them, we weight them, and then we come up with these scores against different use cases. But at the end of the day, right, we are just implementing partners. The scheme council members, who are the GFSPs, are the ones who will make a decision, based on the facts and the figures that we present, but they will have to make a decision what makes sense for them. And we just want to show you an example of the kind of tools and mechanisms that we use.
And within this example, I wanted to point out, so we talked about those three simple things of keeping costs down, keeping revenue up, and cash flow. And so complexity is cost. So what is how expensive is this use case going to be to implement? And revenue generation obviously is how much revenue is going to come in. So that's at least, and then also participant demand. This means that we have incorporated these into our prioritization of the use cases. I would say the lesson here is we were already far down a path before we came up with this process, and would have liked to have introduced this much earlier on into our process, so that we didn't go down a route with use cases that we didn't necessarily need quite as far as we did. The other point I want to make on that is we all believe in participatory process. We definitely think that is the right long-term solution for a payment system to get everybody on board, but it's not cheaper. If we had a authoritarian regime for WinePay, we could have made these decisions on our own much easier, much quicker. But the scheme council is the one that approves these. And there's a process, and it takes time, and time is money. And I would say for the balance that has to be made in terms of thinking about, yes, we want to be participatory. How participatory? How much money do we have? What's our flow for this 24-month runway that we've given ourselves? And is the participatory process, has it been funded to get us to that point? Or to a might be faster and cheaper, but in the long run, maybe not as effective. Okay. And like Nick mentioned, I think we could probably publish a paper of all of, and hopefully we will, all of the chicken and egg situations that we've come up with. There's really, sure, all of you always seem to, there's always this thing that says, well, we can't do this until we've got this. We can't do this until we got this. We can't do this until we've got this. And somehow we end up back at the circle. And I think the lesson that we've come from that is, at a certain point, you just have to pick what's the first thing you're going to tackle, and then work your way around the circle. because there is no answer to the chicken and egg question. You just have to start with something. And that's the idea of reality versus theory. There were a lot of things that needed to get done, but until we actually dug in and started working on them, we probably wouldn't have figured them out.
You covered it.
Okay, go ahead.
So this is the last slide. As you know, a lot of changes in Myanmar and also around the world, right? So Myanmar is not, and since then, the country really suffered in terms of the economic activities. The 80% of the household in Myanmar lost income. It's really a bad situation. And on top of that, since 2021, there have also been political instability in the country, which made the situation even worse. Right? So what we are facing right now is that, and that also coincides with the implementation of this project. So it's it's right from the beginning until right now, Myanmar is going through, I would say, one of the most difficult periods in our history, and that period is also the period of implementation of this project. And so Steve will mention that like, there are a lot of the people that we deal with are the champions who have changed either their positions or their jobs, or the conversations have to be restarted, right? So there are a lot of things that affect and then also cause delay on the project implementation. And I think that's what we're trying to say.
Yep. So I think the last point I make here is this project was born out of conversations of 5 people, myself, CEOs of 3 MFIs, and a deputy governor of a central bank. And with my moving to the Mojaloop Foundation, I'm the last of those 5 that was working on this project. So all of the initial champions of this project are now off of this project. Now, that's amazing because it's still going. There are new champions have come up, and for every one of these, and now we don't have 3 CEO champions, we have 8, 10 CEO champions. Some work to do at the regulator level, but and Nathan and PA were not on this project at day 1, and now we have the 3 of them. So we have grown the number of champions, but it also means that we've lost a lot of continuity. And that's always going to be a challenge when you're talking about 3 to 4 year projects. Okay, and we're out of time. So thank you very much. Did you want to?
No, thank you very much. This is our first time in Boston at the convening, and thank you so much for having us here. And it's really great to be part of the community. Thank you.
Thank you, guys. I will give you all a quick 5-minute break. If you can be back in the room in the next 5 minutes, and then we'll begin at exactly 4:15.